welcome to the Tea Leaves Podcast, where we bring Asia to you through conversations with the people whose lives and work are shaping the Indo-Pacific region. I'm Rexon Yu, Managing Partner at the Asia Group. This special episode, presented by the Asia Group in partnership with Bloomberg, highlights the Infinity Forum, a new flagship conference hosted by the Government of India and Bloomberg. The Asia Group served as Bloomberg's knowledge partner for the forum, which convened just a few days ago with entrepreneurs, policymakers, and other leading figures to discuss fintech's development and its potential to promote financial inclusion in India and throughout Asia. Today, I am pleased to be joined by Dino Setiawan, Chief Executive Officer and co-founder of Awan Tunai, and an advisor to the Infinity Forum. Awan Tunai is an Indonesian startup providing financial and digital e-commerce tools to brick-and-mortar wholesalers and small-scale entrepreneurs in the greater Jakarta area. Awan Tunai has been recognized by several United Nations agencies for the potential of its business model to expand financial inclusion for micro, small, and medium enterprises, MSMEs, if you will. And in 2020, it was named FinTech of the Year by the Association of Southeast Asian Nations and the Monetary Authority of Singapore. Dino, thank you very much for joining us. It's really great to have you here.
My pleasure, Rexon. Thank you so much for the opportunity.
So let's just jump in and maybe start off by talking a little bit about your company, Awan Tunai. It'd be great to get an overview of what you do, what it is, the mission it seeks to fill, the idea behind the company, and how you're striving to achieve, to use your words, quote, a holistic financing solution for micro merchants. Give us a little more on your company, Dino.
Thank you, Rexon. Perhaps, a little bit about my origins will help better understand, what we're trying to achieve here. After 12 years of investment banking, I felt it was time for a change in my career. And, went back to business school, and this was back at Stanford in 2011. And that's why I saw the rise of peer-to-peer in the US with Lending Club and Prosper. And I thought, wow, what a great business model to bring back to Asia. But back in 2012, after I graduated, the digital ecosystem was really non-existent in Asia. So it wasn't quite ready yet. And it really took until 2016 when I came back to Indonesia to really see that, ecosystem is still thin, but now there's enough infrastructure here, digital infrastructure, such as, digital signatures and the start of e-commerce to really bring on board a financial solution. Now, Awan Tunai's story originally started off as, how do we bring, affordable financial inclusion to the masses? And this is really hard, right? Because it's a problem that many have tried to solve, be it microfinance companies, banks, even the government. I was shocked when I saw the statistics. Over 95% of the Indonesian workforce are actually self-employed. They're all micro SMEs. It truly is the backbone of the Indonesian economy. Yet, so few of them are able to access formal bank financing. And in part, it was holding back a lot of the economic growth in Indonesia. So, we actually spent 2 years trying to find some kind of financing solution in this space, and we couldn't do it. In business, sometimes a lot of it is luck, and I truly do believe that. 2 years, 10 different products, we just couldn't find product market fit. Like the risk return parameters didn't work. I mean, yes, if we're ready to charge payday lending rates, 300, 400% APR, we can make it work. But our vision right from the start with my co-founders is, how can we deliver, 2% per month money, to really power this economic backbone? And we just couldn't get the risk working with the publicly available data. So after 2 years of experimentation, the story was actually, a serendipity. We were trying to meet a supplier. The supplier didn't turn up, and we walked into a convenience store, like a mom and pop convenience store in Indonesia. And there, the proprietor, he only had a small shop doing maybe $10,000 a month in sales. He said, "Oh, look, you should talk to this other supplier, like around the corner." And when we walked in, it was being run by one of the second generation. So the owner started it in the 1960s, and this second generation guy was really keen on technology, and he was open to actually adopting some of our digital financing. And the real innovation for Awam was that we discovered that transaction data, what these mom and pop grocery stores purchase every single week for inventory, is highly predictive for credit performance. And that was in early 2019. That's when Awam built up this whole supply chain, for want of a word, digitization or e-commerce platform, where through our business SaaS solutions, we would capture a lot of these supply chain transactions, like mom and pop, grocery store ordering for their inventory, fulfillment of that inventory, payment, and of course, how we monetize through the embedded financing.
So this is so the secret sauce, Dino, is you now are able to capture and build data, private data about the performance of these small, micro, medium-sized enterprises. And that data allows you to basically more accurately predict credit risk. And that drives down the cost of money in some respects.
Yes, spot on. So, the specific data we're talking about is transaction data, detailed transaction data, right down to the SKU units that's being purchased. The important thing about this data is that it needs to be validated. So this is the mom and pop grocery store, right? Your corner convenience store purchasing their inventory, which they typically do, a few times a month or weekly. That data is being captured by systems because the micro merchant has our mobile app. They order their inventory through the app, so that goes through our fulfillment system, which is installed at the supplier. So all these wholesalers, distributors, they run with our order management system to run fulfillment. So the order comes in, and then the supplier will say that, yes, we have the inventory available to fulfill it. And then through our payment acceptance at the supplier as well, the merchant can either pay through our embedded financing, kind of like a buy now, pay later for inventory, or they can just pay cash. Both is accepted. And I just want to spend a moment to kind of highlight the real importance of this data and the validation. Because when you use kind of like an app that, hundreds of thousands of micro merchants can use, that's a lot of user input data that's highly unreliable. Because people can just enter in anything into that app. But the key to know whether it's a real transaction or not, it's being fulfilled from our backend system, which is running in all these suppliers. That's when we know the transaction is real. And this really overcomes a lot of problems in the larger e-commerce space, where there's this problem of round tripping. Fake online merchants with fake customers, just round tripping, fake transactions, fake reviews. There's unfortunately a lot of that happening in e-commerce, and that makes it very difficult to lend into that space, because as a lender, you're not sure if this is a real power merchant or is it a fraudster.
So give me a sense after this started to take off, Dino. What kind of scale are we talking about over the last, I think, 2 years, two years or so? Give us a sense of the reach now of Awam Tunai.
Sure. We've served 25,000 micro merchants. We have 200 suppliers in our network, probably doing 1.5 billion in gross sales, per annum. And this was over the space of 2.5 years. We grew the business with a paltry $5 million budget. So it's a model that we know is profitable. It's strong, and now that we've validated in a way the operational metrics, the proof of concept, now we're ready to scale up.
And you need to scale up, as I understand this, on both the side of the equation for retailers and then suppliers as well. Is that right?
Yeah, it's the classic kind of platform issue of supply and demand, right? Our supply comes from distributors and suppliers. And on the demand side, as from the small micro merchants. I do want to point out though, we are not a true marketplace in terms of we're just matching random merchants to random suppliers. The merchants that we're serving are actually the existing merchants of these suppliers. And this is a critical component of this embedded financing because, I'm an ex-banker. I know of the long, sad history of, microfinance failures, microfinancing programs that have failed. And a large part of our solution is not just technology driven. It is a hybrid solution where, because we're working with suppliers who know these merchants, who are the borrowers, that you're leveraging off a very powerful relationship there. In the US, think of it as the relationship you would have with your credit union versus your bank. I understand there is slight differences there. And that relationship between supplier and merchant is so powerful that the supplier is willing to partially guarantee the credit risk. And this is very powerful because when the merchant, let's say, goes delinquent, because the supplier is on the hook for some of that NPL, they can actually say to the merchant, hey, you really need to pay R129's financing here, otherwise I have to stop supply. And that is very powerful because, a large, burden in collections, which is a very inefficient way of managing risk, right? You've got to send human beings to talk to people at their homes. None of that is really necessary anymore. Like a lot of traditional collections is trying to find people who have ran away, who have skipped, and then trying to engage with them. Whereas we've already got that engagement. Like we have no problems finding our borrowers because we're working with their suppliers.
So I think you used the stat at the start of our conversation, Dino, that 95% of the workforce is self-employed. Is that what you said?
Correct.
And my team has given me, an equally sort of striking stat in Indonesia that there are 64 million micro, small, or medium-sized enterprises in Indonesia, or thereabouts, plus or minus.
Yeah, you could say almost every household is running their own business.
So, how are you thinking about scaling up?
The building trust is really the key here. I'm actually very saddened that in Indonesia, fintech kind of got off onto kind of like a negative perception. It's still a very new industry, and it's unfortunate that a lot of online payday lenders kind of jumped on the fintech bandwagon in Indonesia, and they've really caused a negative perception in the public space. Especially, there's a lot of illegal lenders as well doing egregiously horrible things on the collection side. Now, there's obviously a very big difference between productive SME financiers versus your consumer payday lenders that are out there. So trust is an issue, from the financing side, and even trust is issue from a general technology side. A lot of e-commerce companies have tried to emulate Amazon, right? Where they'll say, okay, we're going to get supply right from the top of the supply chain, from the principal or the factory. We're going to bypass all the middlemen and provide it directly to the consumer or end retailer. And this has caused essentially a tussle, right? That like the e-commerce industry is trying to disrupt the existing supply chain structure, and again some unsavory things have happened where some tech companies have tried to steal customers from the existing supply chain. So there's this real trust problem. So coming back to scaling, once we've established this trust, the wholesaling community is actually very tight knit. They all talk to each other, and they all know that, oh man, there's all these e-commerce guys trying to disrupt us, essentially replace them, right? So coming in as a trusted player, and we've worked very hard over the years to really build up our brand as, look, we are coming in here to modernize your business. We promise never to get into the distribution business. Like, we would not try to do the same business as our customers. That's in our creed, and that's critical to building the trust. And our key selling point is through our technologies and through the embedded financing that's attached to it, we will essentially turn you suppliers into kings. We want to become the kingmaker, as opposed to replacing them with whatever reinvention of the wheel that we put into the supply chain. And that, I think, is one of the critical factors of scaling up, because a lot of the other players out there, again, they're trying to emulate business models that have worked in other countries, be it China, US, India. And I think Indonesia is fairly unique, right? The relationships at the micro merchant level are extremely strong. It takes a very high amount of promotions and incentives to actually break that supplier relationship, to convince a micro merchant to, hey, stop buying at your traditional supplier, come buy on my e-commerce platform.
But that's not what you're trying to do, right? You're not trying to break that relationship.
Absolutely not. I'm trying to leverage that relationship by actually working together with the suppliers and say, hey, let us digitize your business, bring all your existing customer base. It's a captive market, right? And that really helps with customer acquisition. We don't have to do the hard slog of trying to capture every single micro merchant. We sign up one supplier, and that's hundreds, if not thousands, of micro merchants straight onto our service.
So for you, it sounds like if you grow your relationships on the supplier side, that opens up orders of magnitude more merchants as you pursue growth there.
Absolutely. Think of it as a network effect, where because we're partnering up with suppliers with their own existing networks, as we add more and more suppliers, onto our platform, that brings in that, as you say, order of magnitude of micro merchants.
And in what you do, so you're collecting this growing trove of transaction data.
Correct.
Is there in Indonesia? Is there sensitivity around this accumulation of transaction data of merchant behavior? Have you sensed any questions on that front, surprises as you've tried to grow this model?
Well, I think Indonesia, amongst a lot of other countries, are gravitating towards the European standard, right? The GDPR, which is very tight and strict in terms of personally identifiable information. So a lot of the information that's sensitive, obviously your typical KYC information, your tax file number, your social security ID, certainly anything that can identify you personally, and this includes mobility information such as your GPS location, what a lot of the information on the mobile device. Now, the great thing is we're not actually capturing any PII, because what we're capturing is business transactions, right? It's a shop, a convenience store purchasing their inventory. So it's more business proprietary transaction data, which I think is somewhat different from personally identifiable information, which is more kind of consumer focused. So for now, we feel this is more the type of data that any kind of transaction bank would have. Like a lot of SME banks simply run with payment processes. So that it's similar to that type of data. But I would like to add, the real power behind our data is, for the first time now, we can actually estimate the true income of a micro, convenience store. Because when we know what they're purchasing, we know the SKU breakdown, whether they're purchasing drinks, detergents, soap, snacks, and typically each product category has some kind of general margin attached to it, 10, 15%. Or cigarettes typically have very low margins. Things like branded shampoos have higher margins. So we have a very good idea to estimate what the true household income of a micro merchant is. And that has never been possible before, because it's all cash transactions, face-to-face physical transactions. Now, this is extremely powerful data, because now you can start cross-referencing that powerful information with other things. So let's say with mobility analytics, we can see how long that merchant is actually opening his store for, because we know the type of mobility patterns that's associated with running a shop. We know their opening hours. We can start detecting certain patterns. Oh, merchants that open longer for certain, towards the end of the week, they're either making more money or less money. And that's just one example. But the key thing is knowing what their kind of proxy income is. So that's what makes it very powerful.
That's really an interesting observation. Can I ask a slightly different dimension on this, Dino? And that is, you mentioned your observations around the approach by some taking a more traditional e-commerce approach. I have to think that in Indonesia, you also see not just people trying to replicate kind of the massive e-commerce platforms that we're familiar with here in the U.S., but that some of these platforms are interested in the Indonesian market. And my question is, as you look at the competition and the space and the folks trying to fill this space, how do you see the role of government, of the Indonesian government?
Well, I think they have a huge role to play, right? In the emerging economies, red tape, right, tends to be a major concern. And it's because the public sector is a huge employer. So there are these large bureaucracies out there. And yeah, I'm an ex-investment banker, right? Morgan Stanley. I even give the same advice to our kind of corporate clients back then. Certainly corporate clients need to have a strong local partner to navigate this bureaucracy. Because right now, yes, there's been progress, but I know international investors, used to kind of Western economies, certainly want a lot more certainty, both on legal enforceability of contracts, just in terms of what licensing regime is needed, and there's a lot of gray areas in the Indonesian economy, as in other kind of emerging markets. So there certainly is a large role for government to play to help foster larger players entering the Indonesian market, but also for incumbent innovation, like in the incumbent tech sector in Indonesia. That also, I think, needs government support, and support not in terms of subsidies or grants, that type of thing, but in terms of just regulatory clearances, regulatory freedoms, so that we can actually expand and grow.
Are you bumping up against some of those at Awan Tunai?
Well, of course, because we all know VCs tend to pattern invest, right? They say, oh, this business model worked in the US or in China. Now we're going to hunt the rest of the world for similar business models. Let me share a story with you. There's been many Chinese companies who've tried to apply Chinese business models in Indonesia, failed. Same with Indian business models in Indonesia, failed. And I'll give you one very simple example. The Chinese kind of user is very tech savvy, right? If you look at some of the Chinese super apps, they're so dense, full of information. Now, you go to the Indonesian consumer, they're very tech unsavvy, right? I almost half joke to my product teams, like, guys, you just need to make an app with one button in the middle, and that's it. Right? We've done some testing upstream in the supply chain, right? Because we're downstream where you've got wholesalers and then convenience stores. But when you go up in the supply chain, you end up with a lot of small micro farmers as well. And we tried for 2 months to try and educate just a small group of farmers to use our app. And again, we tried to make the app as simple as possible. They couldn't do it. 2 months. And, so there's real barriers there. And so when all these fancy kind of high-tech Chinese apps came in, none of it worked. There's just differences in the quality of telco data. So there's so many different things in Indonesia that I think makes it fairly unique, where people assume that an Amazon or an Alibaba is possible in Indonesia. I'll just say that. Do you realize that there's only 10 major conglomerates that control the entire supply chain in Indonesia? Principals are king of the hill in Indonesia. They're so strong that over the decades, they've made sure their downstream supply chain is highly fragmented so that no distributor can push back against them. Now, are they really going to let a king of distribution arise? I mean, they've seen what Alibaba did to all those poor suppliers in China, squeeze them for all the margin. So there's dynamics in Indonesia where, it takes a local to understand.
So your observation, right? So you talked about how the structure and nature of these relationships in Indonesia is unique, right? If we reverse the arrow here and say, well, do you see similarities in other countries to the Indonesian market and what has enabled success for you in Indonesia? Do you see that elsewhere as you look around your region, aspects of India, other countries? where you've got a similar type of large bulge of micro, small, and medium-sized enterprises?
Absolutely. I mean, investors do ask me, when is Awam going regional or international? I mean, of course, we want to be dominant in Indonesia first, but the analysis that we go through is really, how fragmented is the supply chain? And let me give two examples. Let's say Vietnam, fairly similar, very fragmented supply chain, and a lot of this supply chain doesn't have proper access to financing. So that's a great space for us. But let's say take Thailand. Again, the Thailand supply chain is controlled by a lot of the conglomerates, and they're vertically integrated. So the factories that produce, the instant noodles or the consumer goods owns the distributors, owns the wholesalers, right down to the end retailers. Now, in that type of supply chain, our program won't work. So that's how we would look at it. And certainly, there's far more fragmented downstream supply chains there are than vertically integrated ones out in the emerging markets. So even places like East Africa, we see our model fairly applicable there as well.
Well, Dino, I want to ask you one last question, just because we're still living through it, unfortunately. But how has COVID and the pandemic impacted you? Because I think a lot of the growth that we've been talking about, the success, has occurred, if I have my basic math correct, during the pandemic.
Yeah, there's an interesting impact from the pandemic for us on our kind of technology adoption. People using the app to order, that has certainly taken off. Up to 40-50% month-on-month growth, very strong. But on the lending side of things, and this was actually a very difficult decision for us as a business. Micro SMEs have typically very little safety buffer, very little working capital, almost zero capacity to absorb economic shocks. So we had to drop a lot of the much smaller micro merchants, during the start of the pandemic, because they were just too vulnerable. As a business, sometimes it's difficult, especially as an impact business. At what stage do you say that, I can't help these customers anymore because it's fallen into the realm of government and charity? Right? I mean, as a business, we need to make sure that embedded financing gets repaid. And there was some very tough decisions early on in the pandemic. So it was two-pronged for us. Yes, we certainly got, huge acceleration in terms of technology adoption. But on the monetization side, in terms of our embedded financing that finances the inventory purchases, that we had to kind of take a step back in the early parts of the pandemic. We are starting to creep that back up again. Thankfully, in Indonesia, cases are very low. It feels that, wow, you don't even hear about it anecdotally anymore, and certainly the official stats have shown that figures are down to the hundreds of cases per day now. So we hope that once the supply chain normalizes, we can return back to our normal kind of service levels on embedded financing.
Well, Dino, thank you so much for taking the time to share a bit about Awam Tunai and the success, the model, the vision, the prospect for growth of your fintech platform in Indonesia and possibly elsewhere. We really appreciate you joining us today.
Well, thank you so much for the opportunity, Rexon. It's been a pleasure.
Thank you, Dino. And thank you to our listeners for tuning in to this special edition of the Tea Leaves podcast, presented by the Asia Group and Bloomberg. Please be sure to rate and follow Tea Leaves on Apple Podcasts, Spotify, or wherever you get your podcasts. We'll see you next time.